and this election. Is this the biggest threat to these markets and the economy? So to a lot of folks who are weighing in say this is their biggest concern right now. What does that mean? What does that say? Greg McBride, Bankrate chief financial analyst, joining us on that. What do you make, Greg, about this when people are saying, hey, this is a wild card, this is a worry, this is something that's scaring the you-know-what out of us? That's 2 out of 3 people.
Yeah, it is. It's overwhelming, Neil, and you know, there's a lot of uncertainty, right? I mean, if people don't know what's going to change, or if it does, by how much, and those are questions that the consumer, the small business owner, the corporate executive doesn't definitively know the answer to today, and they don't know when they will. They may not even know the answers to those things November the 9th, after Election Day. And so that type of uncertainty, that's where the risk to the economy comes in, because when people are anxious, they don't spend. The business investment that's been so weak for so long, it's not going to pick up as long as there's that cloud of uncertainty hanging over. You know,
I just noticed that getting this and hearing this at a survey, and then hearing what Citigroup, Bank of America were publishing today in their statements to shareholders and investors, they all agree on this much: the uncertainty of the election and how it's weighing on folks. And they're not even talking whether you're a Democrat or Republican. The uncertainty is so pronounced here that it's a big worry. Now, markets abhor uncertainty, but I didn't realize until this survey came out, Greg, that so too individuals, right?
Yeah, absolutely. And, you know, the thing is, when you think about things that, you know, might normally be considered the risks to the economy, things like, you know, a rise in interest rates, a sharp drop in the stock market, you know, maybe all the weakness from we've seen in overseas economies. Those were single digits in terms of where they registered on the worries. 61% of Americans pointed to the election, and that's 5 times as many votes as what we saw for the second highest, which was terrorism, that ever-present concern that we live with now, which was just 12%.
All right. Let's bring Danielle DiMartino Booth, a former Dallas Federal Reserve advisor, David Kudla joining us as well, Mainstay Capital CEO. You know, Danielle, I know about the uncertainty stuff, but along comes Oxford University out with a report today that pretty much rips Donald Trump and his economic policies, that they're going to cause $1 trillion hit in the U.S. economy. They don't do the same with Hillary Clinton, so I found that a little odd, but maybe they just don't like him. But when they get reports like that, when people hear reports like that, and that are based on I don't know what, that puts more fear into people, doesn't it?
It does, but I think there's a little bit of scaremongering going on here, Neil. And to go back to what Greg was talking about before, I was speaking to an audience of small business owners this afternoon, and frankly, what they're most frightened of is more of the same. It's gotten to be to where they don't feel like they can do business in this country. They feel like the last 8 years have shackled them, and I wouldn't be so sure that a lot of the fears are coming from the prospect of a Clinton victory, because of how it implies that it's going to be more of the same going forward. So, you know, look, think about the Brexit and all the studies that came out before the British people did speak for themselves. There were plenty of these Oxford-type studies that came out that were trying to scare the public.
Yeah, it's hard to ways. But David, maybe help me with this. I mean, right now we have a big change in sentiment over just the last few days as to whether the Federal Reserve raises interest rates this month. Now, increasingly, that looks unlikely. I don't know your stand on this, but that's how much sentiment can change mightily based on a Fed governor or district president's statement at a given time in a given city for a given speech. That's weird, isn't it?
Well, you know, you go back to what Greg said, and I understand people's reaction to the election and their concern maybe about their personal economy. If they work in the coal industry, if they work in the healthcare industry, will their job go overseas? Will it come back? But when we look at the overall economy, I think the last couple of days in the market has told us, the market being a discounter or a predictor of future economic activity, just how fragile the market and the economy are relative to Federal Reserve monetary policy rather than the election. There have been things that have come out relative to the election, but what's moved the markets significantly Friday and Monday were what a Fed president said and a Fed governor said in their speeches.
Danielle, you know, we focus on the campaign as well, and you can't ask for a little more powerful surrogate for Hillary Clinton than President Barack Obama. Her husband, Bill Clinton, campaigning on her behalf in California, or at least attending some fundraising functions. Are either of these guys enough to turn things around for what has been a drop in the polls for her over the last week or so, that they can help stabilize things? Or is a question mark over her health and other comments going to come back to Zoomer?
You know, I think that I'm not so sure that the public necessarily buys into the president's sincerity when it comes to backing the Clinton campaign. I certainly don't. I'm just speaking for myself. And it really is questionable because you don't try and lead from behind. You don't try and deceive the public and come out and make announcements such as major health issues after the fact, unless, again, you're trying to deceive the public. And I don't know that she can necessarily turn that image around at this point. I don't.
All right.